Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect, and your financial growth. The bank promotion exams 2025-2026 are your golden opportunity, and I am here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success does not come to those who wait, it comes to those who prepare. So let's start today. Prepare smartly and make your promotion in 2025-2026 a reality. Welcome to part 43 of my Path to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear, practical sample answers to help you climb the career ladder faster. The subject: Bank of India's miscellaneous MCQs of advance. Question: For loan proposals where the exposure is equal or to exceeds rupees 10 lakhs, how many years of balance sheets should be obtained and analyzed? Option A, 1 year. Option B, 2 years. Option C, 3 years. Option D, 5 years. Correct answer is option C, 3 years. Question: If a borrower submits a consolidated balance sheet for all its units, what additional requirement is necessary? Option A, only the consolidated balance sheet is sufficient. Option B, separate balance sheets for the unit to be financed must also be obtained. Option C, the balance sheet of the parent company is required. Option D, no additional documents are needed. Correct answer is option B. Separate balance sheets for the unit to be financed must also be obtained. Question: According to the document, the latest balance sheet and profit and loss account should not ordinarily be more than how old? Option A, 3 months. Option B, 6 months. Option C, 1 year. Option C, 18 months. Correct answer is option B, 6 months. Question: How should figures be presented in the analysis of balance sheet? Option A, correct to the nearest 100. Option B, correct to the nearest 1000. Option C, correct to the nearest 10,000. Option D, with exact decimals as in the original. Correct, correct answer is option B, correct to the nearest 1000. Question: Net worth of a business unit is calculated as option A, total assets minus total liabilities. Option B, paid up capital plus reserves minus intangible assets. Option C, current assets minus current liabilities. Option D, fixed assets plus current assets. Correct answer is option B, paid up capital plus reserves minus intangible assets. Question: Net working capital is defined as option A, total assets minus fixed assets. Option B, current assets minus current liabilities. Option C, capital plus reserves. Option D, long-term liabilities minus short-term liabilities. Correct answer is option B, current assets minus current liabilities. Question: Which of the following is considered a current asset? Option A, land. Option B, goodwill. Option C, inventory. Option D, patents. Correct answer is option C, inventory. Question. Which of the following is classified as an intangible asset? Option A, machinery. Option B, buildings. Option C, goodwill. Option D, marketable investments. Correct answer is option C, goodwill. Question. Current liabilities are obligations generally due and payable within a period of option A, 6 months. Option B, 1 year. Option C, 2 years. Option D, 5 years. Correct answer is option B, 1 year. Question. The debtor creditors ratio is calculated as option A, sales or trade debtors. Option B, trade debtors or trade creditors. Option C, total current assets or total current liabilities. Option D, trade creditors or sales. Correct answer is option B, trade debtors or trade creditors. Question. For a trading concern making profits, the debtors creditors ratio should normally be option A, less than 1. Option B, equal to 1. Option C, greater than 1. Option D, 0. Correct answer is option C, greater than 1. Question. What does a current ratio of less than 1 indicate? Option A, high profitability. Option B, negative working capital. Option C, excessive long-term debt. Option D, high inventory turnover. Correct answer is option B, negative working capital. Question. The benchmark level for the current ratio for large advances is option A, 1.00. Option B, 1.33. Option C, 1.50. Option D, 2.00. Correct answer is option B, 1.33. Question. The debtors ratio helps to determine option A, the profitability of the company. Option B, the length of credit allowed to trade debtors. Option C, the company's debt equity structure. Option D, the value of fixed assets. Correct answer is option B, the length of credit allowed to trade debtors. Question. The debt equity ratio is calculated as option A, total outside liabilities oblique adjusted tangible net worth. Option B, net worth oblique total assets. Option C, current liabilities oblique current assets. Option D, long-term liabilities oblique current assets. Correct answer is option A, total outside liabilities oblique adjusted tangible net worth. Question. A debt equity ratio of 1:1 is generally regarded as good for option A, retail trading concerns. Option B, service rendering units. Option C, industrial enterprises engaged in manufacturing. Option D, all types of business units. Correct answer is option C, industrial enterprises engaged in manufacturing. Question. The ratio of profit before depreciation, tax and appropriation PBDTA to sales indicates the concerns of option A, liquidity position. Option B, earning capacity. Option C, debt servicing ability. Option D, asset turnover. Correct answer is option B, earning capacity. According to the document, which of the following should not be included in the current asset debtors? Option A, bills receivable from customers. Option B, advances to directors. Option C, accounts receivables for sale of merchandise. Option D, advances for merchandise. Correct answer is option B, advances to directors. Question: what must be done if an auditor certificate is qualified? Option A, ignore the qualification as it is not important. Option B, reject the loan proposal immediately. Option C, a brief summary of the qualifications should be given in the notes. Option D, ask the borrower to change their auditor. Correct answer is option C, a brief summary of the qualifications should be given in the notes. Questions: for credit proposals exceeding rupees 100 lakhs, what is the required paper size and font? Option A, legal size paper Times New Roman 11. Option B, A4 paper Arial 12. Option C, A4 paper Calibre 11. Option D, letter size paper Arial 10. Correct answer is option B, A4 size paper Arial 12. Question: what must auditors certify for borrower companies in proposals involving large exposures? Option A, that the company has never taken a loan before. Option B, that the directors are financially sound. Option C, that funds were used for the intended purpose and working capital was not used for capital expenditure. Option D, that the company's products are of the highest quality. Correct answer is option C, that funds were used for the intended purpose and working capital was not used for capital expenditure. Question: for limits above rupees 1 crore, what additional statement must be obtained? Option A, director's personal financial statement. Option B, cash flow statement for the previous and current year. Option C, a 5-year business plan. Option D, a sworn affidavit from all partners. Correct answer is option B, cash flow statements for the previous and current year. Question: the interest service coverage ratio ISCR is calculated as option A, profit after tax by interest cost. Option B, profit after tax plus depreciation plus interest cost or interest cost. Option C, sales oblique interest cost. Option D, EBIT oblique debt total debt. Correct answer is option B, profit after tax plus depreciation plus interest cost oblique interest cost. Question: according to the document, over limits or ad hoc limits can be granted only if option A, the account is standard asset. Option B, the account is overdue for review. Option C, the borrower has a good personal relationship with the manager. Option D, the borrower promises to regularize it soon. Correct answer is option A, the account is a standard asset. Question: what is the correct classifications for bills payable in the balance sheet? Option A, fixed liability. Option B, current liability. Option C, net worth. Option D, intangible asset. Correct answer is option B, current liability. Question. How should goodwill be classified in the balance sheet analysis? Option A. Current asset. Option B. Fixed asset. Option C. Intangible asset. Option D. Current liability. Correct answer is option C. Intangible asset. Question. The revaluation reserve should be option A. Added to net worth. Option B. Ignored. Option C. Deducted from net worth to arrive at tangible net worth. Option D. Treated as a current liability. Correct answer is option C. Deducted from net worth to arrive at tangible net worth. Question. Which of the following is a favorable indicator of a fall in the debtors creditors ratio? Option A. More than usual delay in payment to creditors. Option B. Reduction in debtors due to more efficient collection. Option C. Fall in sales and resultant reduction in debtors. Option D. Discounting bills of exchange. Correct answer is option B. Reduction in debtors due to more efficient collection. Question. An abnormal increase in other creditors, not trade creditors, is a danger signal because it may indicate option A. Increased sales volume. Option B. Borrowings from moneylenders due to lack of trade credit. Option C. Improved supply relationships. Option D. A shift to cash purchases. Correct answer is option B. Borrowings from moneylenders due to lack of trade credit. Question. What should be done if separate figures for trade debtors and trade creditors are not available in the balance sheet? Option A. Estimate the figures arbitrarily. Option B. Leave the debtors creditors ratio and debtors ratio blank and provide an explanation in the note. Option C. Use the total debtors and creditors figures without any explanation. Option D. Reject the balance sheet as invalid. Correct answer is option B. Leave the debtors creditors ratio and debtors ratio blank and provide an explanation in the notes. Question. Term loan installments falling due within the next 12 months should be classified under option A. Medium and long term liabilities. Option B. Net worth. Option C. Current liabilities. Option D. Contingent liabilities. Correct answer is option C. Current liabilities. Question. Which of the following is exempt from seeking in principle approval for new business? Option A. All new corporate accounts. Option B. Priority sector advances. Option C. All accounts with limits over rupees 50 lakhs. Option D. Accounts with foreign currency exposure. Correct answer is option B. Priority sector advances. Question. The document emphasizes that funds should not be diverted to option A. Research and development. Option B. The capital market or other unrelated investments. Option C. Employee welfare schemes. Option D. Marketing and advertising. Correct answer is option B. The capital market or other unrelated investments. Question. What is the purpose of the early warning signals EWS mentioned in the proposal format? Option A. To predict the stock market performances. Option B. To identify potential risks and deteriorations in the borrower's account. Option C. To assess the competitor's strength. Option D. To calculate the exact interest rate for the loan. Correct answer is option B. To identify potential risks and deteriorations in the borrower's account. Thank you very much for your patience. Request for like, subscribe and share.